coming. So this webinar is being recorded. Finally, I'll show you two presentations. One is on charts, like I do, and the other one is earnings, how I play earning, how you can play. Earnings season is on full swing, especially this week. So I'll show you a few slides earnings play. So let's see, let's move. Do you guys see my screen? Yes. Okay, thank you. So I'm not monitoring your chat questions right now, so I don't know because I get distracted. I will look at your questions later. So I'm not anything, I'm just, so all your questions I will answer later. So in this presentation, I will explain the last week's rates and some charts I set up for coming week. And at the end, I will explain to you the indices like Dow Jones, etc. The market is going much higher. Okay, so it's very important for us to know how. If we know that, we just follow their techniques. So it's very easy to say, okay, how professionals make money in the stock market, but it's not. Once you practice, you spend time learning, you will get it. And I'm still getting it. I'm not saying I'm perfect, but I have a handle on it. I monitor like 500 stocks every day. I've been doing it for more than 10 years. I know they are coming to buy, or I know when they will sell. So anticipate sell or when they will buy, you are just ready for them. And when they come, then you take action. So that's it. If you know where the big boys are coming, you just follow them. But you're buying few hundred shares or 1,000 shares. You're buying few options contract. Okay. So, and another thing is in trading, you don't have to master too many techniques, too many patterns. Don't have to go to different markets because money is limited. You can trade equities, you can trade gold, you can trade crude, foreign currency. You can be up all night. It's too hectic. So money is limited. If I know I'm making money in this profession or in this equity trade, then why I trade gold, futures, silver? Monitor those, just are and just to be aware of. But I'm not trading those. So I just focus on my 600 stocks, and out of 600 stocks, I just want to catch one or two per day. That's it. That's my goal. If I can catch one or two, that makes my day. So I strongly believe in this Bruce Lee's. He said, I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. So he is saying to us that you just practice one kick 10,000, people will fear you. So when I was growing up, I was living with my maternal uncle, and he helped us in. He was looking after us. So one day he was a one-eyed man. He was born with one eye, and he was very so and tall then. And then he asked me. I was 11. He asked me to sit down. I sat down. He gave me one of the advice he gave me. He said, Noshi, never get involved with the physical fight with anyone, especially the guy who is bigger than you and stronger than you. But if it happens that you are in a fight, you will get one chance to bring him down. So that will be the chance you will survive. So make sure is your that whatever you do. So that's exactly what Bruce Lee said, that you practice one thing and we do, or I do, I just practice, trade, same stock and again. So I know, so it's not that difficult. So I suggest you prepare your list of stocks. It shouldn't be more than 300 top stocks: Apple, Facebook, Baidu, Home Depot, Lowe's. Yes, all these stocks which are being discussed every day, and you just prepare your list, spend some time like 1 or 2 hours. Then when the stock is moving, you catch them. That's all. It's like money making machine. All right. So 600, 300 stocks, and out of 300, about 50 stocks every day. Those are the only 50 stocks I am focusing my attention. I don't care if others earnings or it move or some news, because I was not paying attention. If it so happened that it comes to my attention, then I look at it and then I say, oh yeah, okay, this is good one. But I'm just laser focused. When the market opens, I'm just laser focused on those, only those 40, 50 stocks, sometimes 10 stocks. And if I catch it, I miss. So master the few techniques, and the techniques which we need to master is which produces return. So quick and fast return. So the 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 quicker we turn around our money, the compounding effect will take place and we will make money. So quick gains, 3 to 5% in stocks, 60, 80% in options, and move on. Mm, what trade is enter in the trade, especially when the market is bullish, you can trade, but where to exit, that's the problem. One and I received so many emails there. One person, he sent me email, he said, I make so much money on paper, I see them green, but then I don't exit, and then I see my profit turn to zero, and then after the exit, where you will exit, and if you don't where to exit, then study your past gains, what you have seen, like in off 40% gain is normal, and after 40% stock pulls back, then immediately you buy and you set your profit at 40% gains. So um, it 40% gain, 35, 45, so whatever you just set it, know how to exit. So it's that easy. So all right, so fast return. Okay, money making strategies. So I show you via charts, and I use these strategies, and I'll show you again today the breakout strategy. So breakout reversal strategy, opening range breakout strategy. So breakout strategy, some breakout fails, so you have to understand the breakout. So breakout strategy is where the stock is breaking out to new high or breaking some resistance. I watch both. When the stock breaks the resistance, the congestion zone, I get in, or when the stock is consolidating at the high, new high, every day is just near the range, and then it breaks. So for instance, last week or 2 weeks ago, Boeing, past week, Gilead, I'll show you the chart of Gilead, it broke. the consolidation range. So that's one example. Breakout reversal is the stocks falls due to some reason, and then it hits the support or some moving average trend line, and then it just goes back up fast and furious. So that is this breakout reversal is um, strategy, and you can make a quick money on it because the stock is reversing fast. So I'll show you some charts which I think the stocks will do that. The opening range breakout strategy, this is my criteria for entering the trade. So besides those 40-50 stocks which I have, I put this strategy, those 40-50 stocks, and then another window, this strategy is running. I want to catch something, or so something unusual. So I do that. So how I do is on just one monitor window, my suppose those 50 stocks, or let's say all 500, 600 stocks, I set it up for high volume and 5-minute window. So when the market opens, a lot of stocks are moving, right? So some are moving down. So how to catch them? So what I do, I first sort on my trade station radar. I on a net change. So I keep sorting them on a net change basis. So all the top stocks which are moving have gains. They show up on the top. So I know, okay, these are the stocks which are moving. But on the another window, which is set as 5-minute and above, those stocks which are making intraday high after 5 minutes with the high volume show up. So then I know that, okay, these are moving up. On my, there is another window. These are the 15 stocks which are moving 5 minutes high, meaning they are making new high, intraday high. So I take a glance, and if one or two of the stocks which I already identified before are the one, then I pay close attention to those stocks, or the stocks where I already have position. So I need to pay attention. The stock may hit the target and then pulls back, and then I miss the profit. So my in the early morning is watch position, then to take care of a new position. So let's say 6-minute pass or 5-minute pass, some stocks show up. So I know that, okay, these are the stocks which are showing up as moving. I set up another window for 15-minute interval. And as 15-minute pass, some stocks show up on the 15-minute window. So stocks I'm watching now, because on the window there are lesser stocks. So I know there are lesser stocks on a 15-minute window, maybe 4. Can you hear me clearly? Okay, just a second. Audio up is glitchy, breaking. Okay. No, you are, yes, fine. Okay. Okay. Thank you. So I need to fix the sound. I thought I fixed it, but it's a problem. I'll improve. Let's. Can you hear me now? Good. So after 15 minutes, there are some stocks which are moving less in the 5-minute window. So I pay attention to those 15 minutes and monitor those stocks. Then finally, there is a 30-minute window. So in a 30-minute window, there are only few 3 stocks which are moving. Those are the stocks say, okay, I have to
time my entry and get in if left, because there are some stocks which have just reached the potential and they are overbought. So I transfer them into a new window and I say, okay, I'll take care of it maybe tomorrow or the day after tomorrow when they pull back. So that's opening range breakout strategy. A way to monitor like 600 stocks. So I get the email, how you monitor 600 stock. It's not easy to monitor 600 or 500 when so there has to be some criteria. So this is a filtering criteria, and that's what I use. Regarding the sound, I will take care next week again. More for now, we just use what we have. Okay, so the next one is the gap up, gap down, gap up, reverse. So these are the 4 strategies. So a lot of stocks, and we know that all stocks, almost all stocks every day gap up. So when they gap up, not all of them are the trade it fits our trading criteria. So another I have is I filter all those stocks which are gapping up. So I put a minimum criteria of let's say $1 and minimum volume of 100%. So I know, okay, these are the stocks which are gapping up, meaningful gap. So once the stock gaps up, then I take a look at it and say, okay, where is it gapping up? Is it too high? Then I ignore it. The stock has gapped up and still have a lot of potential. Then I start paying attention to that stock which has gapped up, especially if it has gapped up above the resistance level, some congestion zone where it broke. So there was a congestion and the stock gaps up and it broke it. And now it's just either running up or sitting there. So when if ideally I like the stock which is sitting right there at the congestion above, just above the congestion zone. So then I monitor it and I say, okay, this stock gap, it broke the resistance. Now it's getting ready to move further. So there is a battle going on between buyers and sellers, tug of war, and who's gonna win. So once I switch my chart into a 5-minute interval, I watch who is going to win. And we have to make sure that we are on the right side. So as soon as I determine that the buyers will take control or buyers are taking control, I get in via shares or so that's my strategy on gap up. So you have to monitor where the stock has gapped up. Did it gap above, gap way above? Then you miss the entry because it goes back to the support to that level and then rise above again. So the resistance which was before is now support. So ideally you need to wait. But if the stock has gapped up just above it and there's a battle going on, time your entry on 5 minutes, and as soon as you see the move, you get in. So that's the gap up. Gap up reversal is when the stock gaps up on some news and then it hit the resistance. So it gaps to some congestion area. So you have to identify the gaps to the congestion area. There's no point in getting long. Sometimes the stock gaps up and then it starts furiously selling. So if you can identify that it has hit the resistance, you can fade the gap by short by buying puts. I don't do this strategy gap up reversal. Is I rather trade in the way those candidates which are moving to the upside in the bullish market. The gap down. The gap down is the stocks moves down or gap down on some news, like on the pre-market. So the stock is gapping down. We know, everybody knows, so it's in your radar, the stock is gapping. So as soon as the stock gaps down, there are 2 scenarios, or 3 scenarios. The first scenario is the stock gaps Obviously start selling because the news is major news. Some sell-off occurring, like drug approval failure, accounting mishap, some major recall. So the things like that, the stock is just boom, 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 boom going down. So again, if you can time your entry, because the stock gaps down and then it hits, and then it continues its journey to the downside. So if your entry, fine. But a lot of stocks, when they gap down to some major support. Simple moving average, 50-day simple moving average, or there is a support under the support, and then they reverse sharply to the upside. So that's the kind of trade I like, the gap down reversal, when the stock gaps down and then or others, they see the stock and buying it. Start buying, that's where we need to get in. So gap down reversal, look for the gap down at some major support. Major support is moving average or 200-day simple moving average. Just a second, let me do something. I hear some noise. So just a second. Let me see if I can okay. All right. Up, gap up reversal, gap down, and gap down reversal. These are the fours. My favorite strategy is gap up and gap down reversal. So gap up and gap down reversal. I don't trade gap down in the bullish market because I gap, I don't. Okay, so just a second. I will control the problem. Okay, so I have just a short advertisement. I have a $17 2-week trial. If you want to take it, send me email at noshi@financialmarketwizard.com, and I'll send you the PayPal link for $17 just for. And I have a 6-month coaching program for 45 minutes. Program, if you're interested, send me email and we talk for 45 minutes, and I'll explain to you what is my 6-month coaching program. Here's the first chart of Apple. We went long on Apple with the target of 180, 181. And you see, it hit the resistance level at 180 and it fell down because of the and etc. But it's sitting at 50-day simple moving. The others know too. It's not that hard. So this Apple is sitting at 50-day moving average, and I believe the earning is coming up. My feeling is it will go back up and break this 180 resistance. So watch Apple for run up for the earnings and after earnings. Apple is sitting at 50-day simple moving average. Amazon. Send you the chart of Amazon, and when I send you the chart, I mentioned that this candle is trying to break the resistance level. If it breaks, Amazon will go to 1500. So I don't have that chart, but here's the chart of breaking the resistance. So when you see this kind of chart where it's trying to poke its nose above the resistance level and then it breaks it and sits like that, that's your entry right there. And the target is 1500. So Amazon is going to 1500 and it will hit maybe in the earnings. Okay, yeah, so here is what happened. Okay, so Amazon is at 1400 right now. I don't trade Amazon, it's very expensive. I just don't take it, but there are members who also I provide guidance. So Amazon is going to 1500. Here's the BABA chart. Once again, if you look at the BABA chart, how it's sit at 50-day moving average. So if you can master one strategy, which is 50-day moving average. Let's say you have a way to identify the stocks which are sitting moving average after a pullback. So if you filter only those stocks and then look for the move, you will catch some, at least 2 or 3 in a week. So here is the example of Baba. You see how the candles are sitting on 50-day moving average? If the average is flat, but it it's it broke 50-day, then it bounced up. It broke, then bounced. It broke, it touched, then it bounced. So when any stock is hitting the support 3 or more times, it's a valid support. So Baba gave entry here on 23rd January. So if you prepare your list of all the stocks which are on 50-day simple moving average, you have early morning when you see 186 right here, and when you see Baba crossing 186, you just get in. So don't wait, don't need to hesitate, because if you hesitate, you will miss the move. And 181 is, you know that 180, 181 is the support, because this candle is telling you. You see any candle after this sell off, whenever this type of candle appear, there are buyers and sellers. Battle is going on. The sellers are being taken, buyers are taking control, and sellers are worried about it. And so in next 3-day sessions, battle, okay, neutral, and then boom, the buyers to control. So buyers to control. So those who shorted here, they shorted here, they have to they have to cover their shorts. So if you understand all this, the 50-day moving average is the support, 3 or 4 bounces, broke, it's 186, the 191 is, it hit the 191, and then it kept going. This candle. So this candle is telling you that, okay, the buyers, there are less buyers. So if you're in profit, you just take profit. But if you still want to hold, or you took some profit, you want to hold next day action and see what happens next day. If the stock gaps down next day, then you have to exit. But if the stock continues up, then you just hold it. So this candle is giving you a warning that, and see where, but then the stock continues its upward move, broke this resistance. So how you could have entered long in Baba? Run your analysis on 50-day moving average. You have to find the setup, not that difficult. 50-day moving, all those stocks which are sitting on 50-day moving average, give me the list. You get the list. You need to watch. So you watch. You just set the alert one, and as soon as the 186 hit, you take a look, because you have done your homework. You get in. Next day, the stock gaps up. Okay, it's called evening star. So this is an evening star. So the sun may set in. The evening star candle, the sun may set in. So sellers can come in. So just don't want to take risk, get out. But if you have taken some profit and hold, then wait for next day move. Next day move was bullish, and then another boom, resistance broken. So Baba going 205, it can go to 225, 224. So watch Baba. Here's another chart, BXP. So look at this. If you can understand, trend line is not that difficult. Practice it. See how it works. See this code. Just draw the line, or touch as many candles as you can when you're drawing the line. And here it is. 120, 121 is the support. And boom, it went up. So now BXP, it's sitting right here on 200. It's expected to, after this downfall, boom, 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 all the way down. Now it can go up. Watch BXP. Here is Gene. So look at the Celgene. It's just this is the gap down final climax right here. So this, see how the stock gaps down. If people short it on this climax move, they are all money on Celgene unless they short it. I mean, they shorted here and they covered here. But if they shorted somewhere here, they are all losers, and they will be eventually they will be loser if they shorted and they have not covered Celgene right here. So I mean, they shorted here, they are all loser. So the loser is why. So this hammer candle, you see that's why a gap down on a gap down, when you if you short on a gap down, you better be quick in taking, because they can come in. And this hammer candle was, and then next day another hammer candle, even better because it's the low is above the previous low. So when the low is above the, so this is your support, and it's just going through the congestion zone. Right here is the congestion zone. 101 is the strong support, and it's poking its nose above 50-day moving average, and it's going up. Here is another 109, 110 level, and eventually it will go and cover the gap and go 121. So 120, 121. So people who, they bought here, suppose, they will be relieved to sell here and get out at break even. Those who are short, they are wishing that Celgene breaks, but it's not going to break. It will go up. To go, there's a major news coming and break is down. So these guys who shorted here will lose. These guys will be happy to cover right here at 120. The sell-off or the dissipation in the buying. Yeah, this is your it is going up. So watch Celgene. It's just day moving average. You see here another 50-day moving average test. It doesn't want to go down. Here's the support, and it doesn't want to go down. It's poking its nose above 50-day, and then it should move up. Here is exact sign. This is what I found, and I went long. I bought some shares. So after this sell-off, the three candles just sitting on the side, but not breaking the low or the open. So you see how I support three. So when you see this, suppose you prepare your list, and so you just put it on your watch list, and when you see, you get in where the support is 47.50. So 47.50 is the support. So sometimes you have to do your homework, like drawing the lines, the horizontal lines and vertical lines. You have to learn. So this is when I started my trading career. I met this person. I was following this red line, green line software, and I met this person from Costa Rica. His name was Randall. So Randall came. I was very active for him. Newbie. My email address was newbie@yahoo.com. So that was my email. So Newbie used to post charts, and didn't have a clue about trading. Newbie didn't know analysis. Newbie was busy in a red and green line. So this, he came, he spotted me and he said, Noshi, you are not paying attention to attention. So he guided me. I used to chat with him. Or he guided me how to draw the line and pay attention to the moving averages and pay attention to like RSI, MACD, Arun, all these indicators. So he was my first mentor, Randall from Costa Rica. So I don't know where he is. So you have to learn to draw the lines. So here is Facebook. See this Facebook again, 50-day moving average. Here's the support at 180. So suppose, let's see, you didn't get in here. You did not get in here when it broke above 50-day moving average. But if your system, if you set up the system of 50-day simple moving average, you should catch the attention of Facebook. You say, oh, it broke and it's moving average. Let's see what it does. Get in with some position like conservative, 100 shares, whatever is your portfolio size, maybe one contract option. So you get in just the water. Once it breaks 182, then boom, you get in. You should see the action early morning. If you in the trade, the early morning action be a flurry of buying in your window wherever, like on TradeStation, I see blinking, boom, blinking. So I know out of 500, these are the stocks which are blinking. I pay attention to those. I transfer them to another screen and I start paying attention. So Facebook is the one, especially the stock like Facebook, Apple, Baidu. So these are your favorite, you should be your favorite stocks. It's a high, they are high price stocks, but you can trade options. So it hit this resistance. So 189.35 was the resistance. So you know that. So there is one exit right here, 189. When it hit, wait. When it's hitting the resistance and you know your target, you just take profit later. You can always get in once it breaks this resistance line. What if it breaks profit and then you're demoralized? So you take your profit right here and see after hitting, it's doing nothing. It's just going sideways. So I'm just waiting for the move up. So if suppose if it goes up, okay, buy. Earnings coming probably positive. Um, if and remember this, when the stock is sitting at 190, just picture it. This it's sitting at 200. So it's like magic. So if the stock is oh, it's going to 200. If somebody asks you, hey, where Facebook is going, look at sitting at 190, you just say, I don't know, maybe 200. And then when it hits 200, that you are genius. So tell everybody you are genius. And I tell you, one of the I was attending a webinar by someone. He's my mentor in a business. Yeah. So he was just talking about Facebook Live and all that. So at that somewhere here 150 in his chat window, I told him at that time buy some Facebook. I was trying to help, and I told him Facebook will go to 200. Buy some shares. I didn't get any response, nothing. So that was my first and last tip to him. And yeah, it's almost 200. So earnings beat will bring to 200. And how do I know that? I know that this big boys will beat earnings or go up because the Nasdaq chart is telling us, the QQQ us that these stocks, high tech stocks, will maybe majority of them will beat, and the stock will move up. So Nasdaq is going higher. So Facebook for okay, I just a second. This constant noise coming. I don't know what's going on. Okay, so Goldman Sachs. We traded Goldman Sachs, made a lot of money, like plenty of money. So again, same formula. So you apply this. It's like making the same every time when you go to a restaurant. It's the same dish. If you suppose biryani, the chef knows how to make some old rice which he cooked 2 days ago, and he asks you, you want mutton biryani or chicken biryani? So you say mutton biryani. Then he takes some mutton from another place, and then he mix it with put it in the rice, and then he gives it to you. That's not the right way to cook biryani. But if you want chicken biryani, he just takes some chicken and put it in the rice and give you chicken biryani. If you come to me and say, okay, what's the way of making some money? I say, okay, just do this simple technique, 50-day simple moving average. Find those stocks which are touching 50-day move every time and just go long when they start moving. So this is one of the technique. So here is the 50-day simple moving average. Um, Goldman Sachs is like making biryani every day. So here's the move. Here's what caught. and then here. Okay, so you can wait, you get in, you knowing that this is the resistance area, right? How many times Goldman Sachs hit this and unable to here. So take profit. At least majority of your contracts take profit. If you have 10, take profit in 7, hold 3, 8, sell 8, take 2. If you have only 1, then sell it, don't hold it. And so, but you know that if it breaks this congestion zone, you will get in again. So this Goldman Sachs, we caught it just on a simple 50-day moving average. And here's another entry happening, right? So it's moving up. Goldman is going up. So it's just, and yeah, and you see it moved up. So I sometimes forget how many charts I prepared, seriously. So I don't know if I have 4 charts or 5 charts on the same symbol. So it is actually sitting at 268. So that's exactly like this. So here's the replay. I give you summary. You watch Goldman Sachs sitting at 50-day moving average. This is the candle bullish. You get in, boom, boom, boom. You get in. You don't hesitate. You get in. Um, if you hesitate to pull the trigger, that's what I receive email. I'm hesitate. I don't pull the trigger. I don't take. I don't take my loss. So you know this is rising 50-day moving average. What will happen? Worse will happen after you get in on when you get in on this day. It can come down here. You lose money. So it's okay. You know, you have to lose, but get in. So get in. How you got out? You got out based on this. Look on your left. Always look on the left. People don't look on the left. Always look on the left and say, okay, this is the congestion zone. I better get out. You get out, or majority of your contracts get out. That's the way you need to trade. Take some profit. Then next day it gap down. Signal is just sitting there. Then when you see this big move, you get in again. You say, here you go, Goldman Sachs, you're moving again. I get in. And then when you draw this trend line, you say, okay, I'm gonna get out again. So you took at least 2 trades in this move. So now the third trade will come when it breaks 269 or so. When you see 269 breaking, you get in. And worst come worse, it comes down to 665 and start coming down, you exit it. So don't hesitate. Here's IBM. So this is what IBM trade we took. So that's why I don't trade gap down. I actually love gap down to go long. So when the stock gaps down, I say, okay, good. I'm going to watch this stock, see if it moves to the upside, so I get in. So down like IBM, Facebook, whatever, I feel good. If I'm not in a position, I feel good. I say, okay, here is my money making stock. In next few days, it will move. Let's see if I can catch it. So IBM earning, it fell. So, you know, if you shorted here, bought puts, and then if it didn't do anything, then you are stuck. But here is this candle is telling you when IBM gap down, I watched, I said, okay, I see what it's doing. So when I saw this candle, I said, okay, I need to buy some call, because what happened, the stock gaps down, but then next day there's no reaction, so it stopped. In fact, this is a white candle, so uh, penetrating the previous red candle. So and my stop is right here, and then next day it moved big. You see this big white candle, this is another bullish sign, the buyers took control. So whoever was sold here, shorted, they all losing money and regretting. So that's why and then the reaction is faster. So it's even faster, because the stock gaps down, they shorted it. They think, okay, it's a trash, this and that, IBM lost this mojo, whatever. So they short it. But then when they see this kind of action, they have to cover their short. They don't want to lose big, so they cover it. So IBM going up, and you see our target 168. So how did I determine my 168 target? Based on the gap down. So this you need to know this. The when the stock closes the gap, you have to cover your long position. The reason is those who were long here, they lost money, right? So they were all hoping, oh my God, I'm losing big. I bought at 168 because of earnings, and now I'm losing my shirt. It's at 161. Then they are happy. They say, "Oh, it's going up. Oh, it's going up." Then when it came to close to their buy, the window is closed. It's called window getting closed. So there's this one window got closed, and then there is one big window here. So in one chart or two chart, two windows got closed. Those when the windows get closed, your position, at least majority of them. So look for the window getting closed. So one window and then another window, boom, 168 was exit. So if you want to re-enter, okay, it's re-entry here again. After this, it will, the game is not over. The buyers are in control and the IBM will go. And what happens is this is the resistance line, right? So this is the resistance line, 170, 171. When the IBM crosses this, then the new buyer will, and IBM will make a new high. IBM to continue going higher. Here's NTES. This is a wild stock. The options are expensive. It moves big. It's a Chinese stock. Again, drew this line. Support is sitting here, bouncing back up, up. Now it's poking its nose on 23rd of January. It's poking its nose above 50-day moving average, and looks like it's gonna break it. Let me see if I. No, I don't know what NTE is doing. I think it went up. So 50-day and above moving. So this entry, as soon as it breaks, your entry triggers. NTES. NVDA. So NVDA is hitting this resistance right here on 23rd January. Your entry came right here, here, when it gap above this 50-day moving average. Now it's kind of late, so it's hitting this resistance at 239. So it is it's at the resistance line. Usually we had calls and we exited. So, but this is not my favorite chart pattern. But because NVDA is moving continuously up, so we bought calls, made like $300, $400 per contract, and got out. So NVDA is no longer. Got out means got out in a short-term portfolio, like swing option, swing stock. In the long term, I have it since $50. I've been preaching about NVDA since it's 50, 60. That's going higher. So it's just sitting here. OSK, this is another I caught. I didn't trade it. Maybe I bought 100, 200 shares. I didn't trade options, etc. So this is again another one standing at this trend line. You see how many times touching, touch. So when it touches, this is the support. When you see, if it is on your resistance, you don't buy it when it's doing like this. You don't buy it because you're wasting your time. The stock is wasting your time. This is your congestion zone right here. All this is congestion. But when it breaks above, then you have to buy. If you want to, you buy, and then your stop is right here. So you buy, but then it can fall to 50-day moving average, and if it holds, then you have to go long again if you exit it. But let's say you bought it, it's right sitting at support, because the resistance line becomes the support. So always remember, the resistance becomes support, the support becomes resistance when they break. So when this resistance line breaks, it's the support. So that's the way it is acting. Sellers here, they are buyers. All sellers were gone. Okay, so now, yeah, you see. Okay, so here it is. It moved up big. So if you bought it here, this is your exit. So I missed it. I think I didn't make much money. I got out. Sometimes I exit because there are other opportunities. So you get in and then you get out. A few days the stock moved, hit the target. So this game is over right now. But I'm showing you how you could have spotted the entry. Here is Pepsi. We bought on earnings play. We bought it here somewhere, and we got out with calls in earnings when it hit 121, 122 given. And this is the way I calculated my target right here based on the trend line. So I said, okay, I need to get out of the Pepsi and lock my gains. It was earning run up. Roku is giving trouble. Long term, it's going up. So if you want, you can buy 100 shares and just forget about it, keep it, and come back later when it hits 75, 100. Just buy 100 shares and hold it. It's not doing anything right now, but it's going higher. And here's the support. It's testing the 40 support from this candle. You see, if you drew this line, the 40 support, it tested 1, 2, 3, 4, 5, 6. 6 times. So 40 is a strong support. You can go long on Roku. I'm just waiting for a move here to this level. So Roku is long. Roku is just sitting at this support. Okay, this is another way of drawing the line. PD, SRPD, I don't have any position. I'm just showing you the chart. You see, I in every webinar, I try to explain that when the resistance line is broken, that's the support, and then you get in. So if you spot this kind of trade, you say, okay, this is the channel. This is my long term resistance, and it's sitting at 62, sitting, and then when it moves, this is your entry right here. Do you know that, okay, it's now, it has, the train is leaving the station. Train was sitting here for 4 or 5 days. Now it's leaving the station, I get in. So you can get in. I don't have any position in SRPT. Here's SWKS. This stock is giving me trouble, but eventually will come out as winner. Right now the chart has become choppy. So this is a choppy chart right now. But and here, so if you look at the this zone, this is another zone where this is right here, and it tested it here, broke it, but formed the hammer, and then there was another bullish move. But then next day, the sellers took control, and sellers came, but still, this low is still being held at 97. So between 96 and 97 is a strong support for SWKS. And when Apple moves, this will move. So keep this stock. If it breaks, if it starts going above 100, or you see gap up any day, Monday, Tuesday, you can get in. You know the 96, 97 is strong support. Oh, so it broke 95. So it's getting, so okay, I didn't know I prepared the chart. Support. So here, I drew this line and said 96, 97 is the support, but it broke. And I drew this line. I still have the position in it, and I'm giving 1 or 2 more days. This is the support area. If you based on this candle here, here, this big one right here. So another 1 or 2 days to see what it does. But this is a bearish candle, big bearish candle. So the thing is, you will spot many bearish candles like IBM did, gap down big time, climax move, but then what happens? The stock reverses. So having just this one big candle, it's not telling you that, okay, you need to exit, because you have to look on the left and see where is the support. Here is the support from all the way to the left. This is the support zone. So watch for SWKS to reverse to the upside. Workday, I don't have any position, but I saw it, I missed it, but I'm giving you, showing you how you could have caught it. I should have caught it, but I didn't. So this was the resistance zone here, right here, right? It was poking its nose, but failing. But as soon as it, first of all, these 3 candles, consecutive 3 white candles, is telling you the buyers are in control. There's no, but let's say you are not in this trade. Let it break this resistance line, you get in. This is your entry right here. Suppose you missed the entry here. This is your brand new entry, and get in, going higher. Exxon, we traded Exxon at earnings. We got in at here, earning play because crude is moving, etc. So I said, okay, we get in Exxon, but and then we got out here when I saw the congestion is not moving, so we took the profit. It was a good one. So when the profit is good and the stock is doing like this, don't hesitate to take profit because there's something else moving, right? So if it is here, we bought I think 90 strike, dollar something, and sold $1.50. We made 30-40 cents per contract, which was we got out of Exxon in earnings play. AXP, we did the same thing. 50-day simple moving average, financials moving, earnings coming up. So get in on the earnings run up. So we got in an AXP, different strikes like 97.50 strikes, 100 strikes, and then we got out with profit. That's it. Baidu is running up, probably run up more. It's sitting, is these two patterns. And Baidu run up on earnings. Tal, this is another trade I explained to you. We took this trade. We made too much money on it, and I received too many emails when Tal was not moving. What is doing? Should we hold all that? And I kept saying hold, hold, hold. This was another earnings play. So if you see this, we got in somewhere here with May 25 calls. So I was, and it was doing this candle, then it was doing this, and it was doing this. So, and I was receiving email, oh, should we get out of TAL or what we do, add more, blah, blah, blah. So and I saying hold, hold. So what I was looking at, hold, why hold? If you look on the left side, you have to look on the left side and start paying attention. Look for the hammer candle, look for morning star or whatever candles you see from where it bounced up. So I was kept saying hold. This was I was looking at this congestion zone, this support area. So I was saying hold, and then boom, you see this candle. How? So when it hit 32, 33, we exited $150 per contract profit. So this hold and it earnings move, this big up move. So make big money on another earnings trade. Now this is the example of TXN. So this TXN gap down on earnings, right? So you see gap down. So you can go short on this, but you have to know that you can go short, big move here. Look at the volume, right? Like it's gonna go down further, but and you can go short, but then you have to be prepared when like this. Then next day it can be a reversal. So when you see the reversal, first you go long, and then because you don't want to get out of the short fast, and then you go long, and then the stock which you went long, then it starts going down. Then you're losing on the long side, and you don't have any short position. So now you're regretting. So first, suppose you bought puts, and next day you see this move, then you say, damn, it's moving up. So you are on a high alert. You can get in with some calls to balance it out and see which way the cow sits. But so you need to do that. But if suppose you don't, then look for this move. Then you say, oh man, I really need to go long and close out my short. So this was your damn thing, saying maybe I'm gonna lose money on shorts. So you buy some calls. This is the confirmation. You go long, close the short. So no more. It's going up. And when the window is closed, you get out because those guys who bought here, they are just waiting. They are waiting for this to come up so they can sell and get out. So you will see the selling pressure coming in. So if you know the selling pressure coming in, you get exit, gradual exit. USG, another example of USG, I'm giving you It's holding this 50-day moving average, bouncing. When it pokes up, you get in. So pokes above the resistance line. So USG is another one for you. MU is we trade MU and make money. We traded here. I think we traded somewhere here, and now we don't have any position, but MU is sitting at tight support. So this is a tight situation going on. So you don't want to get in long or short. You should, if you have to, you go on the long side, because the trend is telling you that it's in the long side. This is just a short pullback. So, but if you don't have any position, you just wait for the day to move, for the move to come. When the move come above 44.14, 44.15, you get in. Don't hesitate. Why hesitate? You know already where the MU support is. So don't hesitate, just get in. CLX is again, as the support line is trending up. We had a position and we exited at break even because it started doing this choppy thing. So when it starts doing this choppy thing on the left, on the right side, and you are in a break even position, you get out and then move to something else. So we got out at break even. So it's sitting right here, 50-day moving average. So just wait for the move to come and then get in. So just keep this on radar. EA, we had EA long. So we went long on EA at this candle right here. So when you see this breakthrough of 50-day moving average, you get in. You have to get in. Suppose you intend to put $1,000, you get in with $500, and then you say, I will get in. You can get in more. You get in more here after it breaks. You can get in more. So we bought EA in two services, one in the swing. So swing, we are already out, and we have a vertical spread in the vertical service, and we are holding it. So EA is going up. Now it came down. So this is the resistance line. So this is if it holds this line and then it reverses, then you get in again. So EA is long. WDC is going long, is going up. We made money. We were losing money, and then I kept saying hold, and then buy March calls also. So we added more on top of February calls, and look what FDC did. So WDC is moving up, and it broke this 200-day moving average. So it's going up. WDC is bound to go and close this window right here at 92. So knowing that 91, 92 is the resistance, the sellers are sitting here. So look for all those guys who bought for you. They are the one who will come to sell. So they will be happy to sell. So it's not like everybody sold and there's nobody holding the bags for here, this zone. So this is your exit right here. So you're prepared to sell. Okay, yeah. So this kind of, look at this bullish move. So this is the earning. So another thing I teach and I emphasize, you have to watch the pre-market or an aftermarket move. The WDC gap down in the aftermarket when it announced the earnings and the pre-market. But then you have to um, um, develop your skills in learning pre-market and aftermarket. So I send the alert when the market was closed, the WDC will move up. Don't worry. It has gone down in the after hours. And this is what happened. And then I bought more. So when you see this, this is called piercing candle. So this is the perfect solid bullish pattern. When you see this move, you don't hesitate, because what happened? The stock gaps down, but then buyers took control and stock took the stock in their control. So WDC is going higher. So I added more and I said more, buy more. It's going up. This is General Dynamics. I missed it. I spotted it, but I missed it. So again, the same thing. The GD announced earning and it gapped down. It gapped down here at 50-day moving average, but then it reverses. So when it's reversed, suppose you catch here, it didn't catch it, you catch here, it didn't catch it. My alert was set here somewhere, and it came to my attention, but then I didn't take action. and it kept going. So this is a solid bullish move. So the way you can trade this is this. Look for other stocks in category. So I have some members who are very smart. Um, they said, oh, GD did this. This is gonna do. The other stocks will in the same category. So pay attention to other stocks in the same category. See what they are doing, and then get in if you miss GD. So you have to know that too. JKS. So this is a steel stock. See, this is a bullish candle. After this downfall, this is a bullish bullish setup. So you have to go long on JKS. Another was J&J. So another earning trade. And so we trade this kind of in earnings service also. So J&J moved down on earnings, right? But next day, no action. So what happened? All these sellers gone. See, volume climax. So this is a volume climax. All the sellers who wanted to sell, they sold. So this next day, when it did this, and the third day is doing this, is need to go long because here's the 50-day moving average. Here is another support. This is the volume climax. So go long on J&J, and we did, and we are in profit. Here's another stock, ALB, and it's again after 3-4 days of move, this solid candle moving up. So go long. Intel. So Intel, after sitting here on earning, it gapped above the resistance. So it is a long candidate. I don't have any position when it gaps and when it pulls back to this support. I will get in because the resistance is now support. So get in on Intel later, not now. I'll just watch it. So it's in my radar. Now I see the chart. When Intel does its things, I know I can get in. So it's not that hard. Twitter was moving on Friday. I saw it, didn't get in because I said, okay, how much it will move, right? So I didn't get in the Twitter, but it kept going. It's at 24. One of my member, he bought weekly calls and sold the same day, made money. So Twitter, he caught it, and I saw it too. I didn't take action. So I didn't take any action. He took action. He bought weekly calls and made money. MMM, see MMM, this is the support line. So MMM here, and it broke the resistance. So triple M is long. It's a Dow Jones component. Dow Jones going higher is going higher. F5. So F5, you see again, F5, boom, big candle, but then climax. So big candle. That's why I don't like these big candles because the move is over. So I prefer short candles, and then on the big move day, that's your exit. So F5 this is a bullish setup. So after this big move down, the stock gaps up and it's sitting here. So F5 is supposed to be long, so I'll watch for entry. EDU, so we traded EDU before, we made money. Again, it's now sitting here. This is a classic bullish pattern, and here came the confirmation. So this gave you the warning that the stock gonna move up, and this is the confirmation, and EDU going higher. Gilead Sciences, I told you the breakout. So Gilead Sciences is breaking out, earnings coming up. So this is a solid bullish candle breaking the congestion zone. LRCX, again, another volume climax. You see 2 days of big move down. So LRCX should be long based on this just simple support line and 50-day moving average. LRCX is supposed to be long, not short. Pepsi, again, is setting up. We exited, and it's setting up again to go long. So it already did this. So Pepsi is going up. Win. So last chart. So Win fell. We traded Win. We made too much money, like crazy. My members locked big gains, thousands and thousands of dollars on going long on Win. I sent the alert, and we made big money. So we exited, and then Win crash. So Win crash, and some on Facebook group, people are screaming, saying Steve Wynn is a rapist and all that. So whatever. You don't care, right? you're trading. So here's the channel. Here's the volume climax on win. It's right sitting right the support. So the resistance line, which the resistance becomes support. Support become resistance. So just reverse it. So it's sitting right as support at 180, and I will watch it. This window is closed, and I will watch if the buyers come in. When the buyers come in, I get in. So watch when, if it breaks, it breaks. So I'll watch when for going long. So this is the Dow Jones chart. This is continuous move. You see from November, this is the breakout, and it's in continuous move. We made too much money on DIA calls. Then he made another 34,000 on DIA calls. It's just service I have. It's on the website. You can sign in. I send alert on DIA, SPY, QQQ, and we make tons of money. Dow Jones going to 28,000, and is going there. So just if you can time your entry on Dow, DIA, etc. Here's another chart. Here is SPX. SPX, my long-term target, end of year is 3,100. I don't know, maybe it hit tomorrow, who knows? But it's now SPX target is 3,100, and it's going there. So no doubt. So all the news is in the chart. So impeachment and collaboration and whatever is on the side. But then you look on in the chart, and then you say what the market is telling us. The market is telling us the market is going higher. Maybe after 3,100, some major news comes, and then the stock market goes down. Who knows what? But 3,100 is coming. So here's the Nasdaq. It's going towards 7,000, and it broke the resistance. So when it breaks the resistance, it's a strong support. And here's the Nasdaq is going higher and higher towards 7,000 target and higher. Here's the Russell. I kept showing you the Russell charts when it was poking its nose here. I was saying that okay, Russell is facing resistance. It also broke the resistance. So when all your four indices are moving up in tandem, the market is really bullish. So there's no divergence that one indices is moving up and another one is going down, another one is on the side. So when you're watching all four markets, then you say, okay, which one is telling me to giving me heads up? So Russell was giving you heads up. So it's saying, okay, you need to watch. Russell is telling you that, okay, I'm also going up. These are small cap. This is a small cap. You can watch IWM for that. So it broke resistance and it's going higher. So Russell is also going. So the market is in bullish, strong bullish mode. All right, so this is the end of this presentation. I have a $17 offer. If you want, you can join $17 for 2 weeks at what I do every day. One of my member, Ryan, he made 160,000 just this month, 160,000, right? Hard to believe, but he did it, and he's only 22, 23. So if he's only 22, 23. I have a 6-month coaching program. I go into detail. This is just a preview I showed you. So just don't think that this is it. I'm showing you what I do, but there's two to it. So the strategies, send me email and we can talk for 45 minutes. But for 45 minutes, you have to pay $60 for it. So send the payment $60. I'll tell you where to send, and then we book. You book the strategy session, 5 minutes, and then we talk how my 6-month coaching program works and how you can benefit and you become independent and profitable trader. I will teach you for 6 months, 6 months, and maybe more, maybe 9 months. It depends. My next webinar is on February 4th, so which is next Sunday, and I have another presentation for you. If you hang on a little more. So earnings season is in full swing, and I'll tell you, people ask me how you play earnings. So I prepared 4 slides. So 4 slides maybe take you 5-6 minutes to show you how I play earnings. And then if you want to, you can. So far, we have 100% win in the earning, this earning. So it's incredible, right? So Earnings, every quarter company announces earnings. This is a high earning season and companies are announcing earnings. So you can spot the move in the stock based on the earnings and take advantage. It doesn't mean that you hold on the earnings day. You buy calls and then you hope the stock will come up with the earning beat, and then the stock will gap up and move up. So that's one way of doing it. But you can risk. You're risking money, right? So it can do the opposite action. So that's one way of doing the earning. But the way I do it, I anticipate the earnings run. So before 2 weeks before the earnings, I prepare my list and watch what the stocks have done in the past, what is expected to do now, with respect to support and resistance, what's the target, what it's doing now, and I get in 2 weeks before earnings and take advantage of the move, whether to the upside or to the long side, and sell even before the earnings come. So even before the earnings, I get out. And so far we are doing great. So anticipating the earnings run. The next one is aggressive earnings play, which I talked about. You can go long or short if you anticipating that this is what the stock will do on the earnings announcement. But you have to understand the previous history, the sentiment, the support and resistance, where it is, where is the target, where it can jump on earnings. If you are wrong, how much wrong you could be, what you will do if you're wrong, how you will manage that trade into consideration, all that, and then get in with the if suppose you think the stock will gap up on earnings, when you get in on long calls, whether by out of calls or in the money or at the money, and then you have to manage the trade if it doesn't move in your favor, or you can lose 100% of it. So that's aggressive play. I hardly do this, but sometimes I do that. The third one is after earning announcement. This is my favorite. So let's say the stock announces earning today, pre-market. Market moves up, I watch that action, and then I take action on based on what and take advantage of it. So there's a action and then reaction. So the stock doing something during pre-market, it does the opposite during market hours. So when this opposite of the market hours and you can spot that move, you get in, and the reaction, the return is faster. So that's the kind of action I take. And the stock usually move 3% to 5%, and with the swing options, your gain could be 24% to 50%, 80% in short period of time if you can catch this. So action and then reaction. So this service is available for 197 for the quarter. Uh-oh. So this service is available for 197 a quarter. And if you're interested, then send me email at Noshi@Financial Market Wizard, and I will send you the PayPal link. This is not on the website yet, but we have been doing it for last 2-3 quarters. The new website will come and you will see that this service listed on the website. So 197 for this. Let me see if I can answer some questions. It's already 1 hour, 20 minutes. Okay, the more you okay, so all right, okay, it's much better now. In the early session, there was a complaint about the voice breaking, so which I fixed it, but I have to work on it. All right, so there are no questions. The questions, let me see, I keep going. A win, I need to show the win chart. I showed already. I guess I anticipated it. People will ask. All right, so there are no questions. If you still have questions, you can always send me email. Reply. All right, thank you. The right now the market is moving up. The futures are up. So have a good time tomorrow. Prepare. It's not that difficult. And if you see it difficult and you're not my member, you can see it for $17. That's it. And what you saw me is just a glimpse of the teaching. I'm not teaching everything. Of course, it's not. It's a 6 to 1. So if you're interested, sign up for strategy session and then we go. All right. Have a nice day. Next Sunday. Thank you.